What's going on? What's going on, everybody? Shout out to y'all. What's up? What's up? Today is Saturday, April the 5th, 2025. What's going on? What's up, Lenny? What's up, B Rush? You said it's too early. I gotta get it early, man. I got other things to do today, so I gotta get it going. I didn't go live all week, so I pretty much waited to Saturday or today. Been pretty busy all week, so I waited to today to go live. What's up, Sneaky? What's up, Claude? Appreciate y'all joining. Shout out to y'all. What's up, Lenny? What's up, Carrie? What's up, Shy Swag? What's up, Coleman? Shout out to y'all. Good morning. Good morning. We got a lot to discuss. It's been a wild week in the overall market, so we're gonna get into it here in a minute. What's up, Jude? What's up, Ed? Appreciate y'all joining. Make sure y'all hit that like button for me. Subscribe if you're brand new to the channel. What's up, OL? So, hey, stock market down, they're pushing fear in the market, tariffs, crypto news. What else is going on? Regulations, legislation, Congress. We got a whole lot going on in these markets, and they're pushing a lot of fear, but I'm going to cover it. We're going to get into it. What's up, ZZ? You said you've been waiting all this week. That's what I'm saying. I ain't been live all week, so here we go. Hopefully I can make it worth your time. I'm gonna make it worth your time right quick. So if y'all haven't heard, the stock market is down. Let's go ahead and get into some news. What's up, Lawrence? What's up? Shout out to you. I'm not gonna try to hold y'all all day today, and I'm going to go live tomorrow, so be on the lookout for that. Let's go ahead and come over to the news. Let's get into some economy news right quick. Let's go ahead and knock that out the way, and then we're going to get into the charts. We're going to talk about XRP Futures, and that's a big deal for me, and I'm going to cover it here in a minute. But let's go ahead and knock some of this economic news out the way.
Good evening from New York. I'm Chris Hayes. Well, Donald Trump is single-handedly, unilaterally, and for no reason plunging America into economic crisis. I've never seen anything like this at all in the decades I've covered politics. Now, we should note, he promised to do this on the campaign trail time and time again. And despite the many hopes and prayers and justifications among Wall Street traders and CEOs that it was all just campaign talk, guess what? Trump today announced he was imposing tariffs, national sales tax on imports, on everything the United States imports, plus additional taxes.
Check it out. I think everything is a plan. Everything is by design. Everything is on a script. So everything is about timing. So here come these tariffs. And who has been watching my live streams ever since I was saying a few months ago, I said, hey, the stock market is ready to correct. It's due for a correction. And I got it documented. It's on my live stream. So who was watching when I was calling it then? But here we are a few months later, and now they're blaming it on tariffs. But I can visually see, because y'all know the markets are algorithmic. So I'm able to go into the market and pretty much see moves and patterns before the overall outcome happens. So who remembers me talking about this a few months ago?
Of double digits on everything coming to the U.S. from dozens of others of countries. This was essentially...
let me get a sound test. Is my sound working properly? I got some people in there talking about the sound. Is the sound sounding good? Okay, y'all saying it's Lawrence, it gotta be you. It gotta be you, because everybody else is saying the sound is good. Press 1 if y'all can hear me. Okay, y'all can hear me? All right, Lawrence, figure it out. I'm gonna keep moving.
The worst case scenario.
And the market reaction after hours, I've never seen anything like it.
You've got a lot of small companies with small margins that are going to be hurt by this, put out of business.
If you saw the post-market reaction, it was kind of down across the board. People are looking.
And these people are so reactionary. I'm going to tell y'all that, man. The media is reactionary. I only cover this just to give some headlines that add a little extra, a little extra entertainment for the live streams. But these people are reactionary. Again, if you follow my channel, we ahead of all this. So I'm months ahead of anything they come out talking about. So I just want to mention that.
Looking at their 401ks, and they worry about it.
This, I think fair to say, is worse than the worst case scenario of the tariffs that many in the market expected the president to impose.
Prices of everything, and I mean smartphones, computers, cars, clothes, shoes, avocados, it's all about to go up on everybody. Now, Donald Trump, and this was a tell, waited until markets closed, and in a bizarre, incoherent, and genuinely worrying performance, imposed a $6 trillion tax hike on Americans, something that I'm pretty sure has never been done in American history.
How can anybody be upset? They will be, because we never charged anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of the European Union, very friendly. They rip us off. It's so sad to see.
I agree with you, B-Rush. KIs. We need KIs because out of the KIs comes opportunity. There's a lot of opportunity right now in the market, but they're pushing fear. They're pushing fear and panic. But again, smart money, us smart money traders, us smart money investors see opportunity, and we're waiting for opportunity. So I've been telling y'all for months, have your fiat, have that cash stacked up so that when the opportunity presents itself, you're ready to take action. So I hope hopefully y'all been grinding, y'all been hustling, y'all been stacking some savings so that when these opportunities come, that you can take advantage.
It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half.
Okay, I got to just say this real quick, and we're going to get into this later in the show. It's a lie. It's utter nonsense. The European Union charges the U.S. a 39% tariff. That's obviously preposterous. It's totally invented. We don't even know where that number comes from. Okay, we're going to get into where it might come from later in the show, but just keep that in mind. Now, aside from the fact they made up all the numbers and completely fabricated this retaliation, economists are saying this will absolutely kill American growth. It's going to lead to price inflation, a possible recession, possibly a combination of both. The much feared stagflation. In fact, before Trump's announcement, right, lots of folks were trying to run the numbers. And the worst case scenario outlined by the credit rating agency Moody's, which was a 20% blanket tariff on all imports, estimated up to 5.5 million job losses, which would send the unemployment rate up to 7%, the worst since the Great Recession, and cause the country's GDP to sink by 1.7%. But today's announcement appears to be in excess of that. The worst since COVID, I guess I should say. Again, I'm struggling to communicate.
All right, I'm going to move on. I just want to play that headline. Let's go ahead and play this other clip dealing with the
When
economy.
all of these policies are combined, there might be huge. As he revealed his placard, the stock...
Let me see right quick. Let me see. I want to play this next video dealing with the economy. All right, let's go ahead and play it.
On what was described as Liberation Day this Wednesday, Donald Trump held up a large cardboard sign in the White House Rose Garden with a list of countries along with his estimate of their tariffs against America, which he said included currency manipulation, trade restrictions, and other distortions like value-added tax. As he revealed...
All right, that ain't the video I wanted to play. You know what I want to play next? Let's go ahead and get into the people. Let's go to the streets. Let's see what the people have to say.
It's a balloon that's going to pop eventually.
See what the people have to say about the economy. So let me go ahead and come over here. 1 second.
The investment landscape for asset managers is evolving.
Poorer and poorer while they get richer.
2008 numbers. Does this mean I'll be able to buy a house before I'm 60?
Hello everyone, this is Emmanuel Cook. We will be reacting to a new video today, so make sure you guys like, comment, and subscribe down below, and let's get into the video.
I mean, who voted for this shit? What is happening? I mean, how's your 401k today? How about your investments, your savings, I know most of us don't have any, but believe me, the stock market crashing is not good for us. These tariffs are bullshit. I have no idea what the end game is here. You guys think that this is all about family values and bringing back the core of America and all this stuff. These billionaires, they don't give a shit about any of that. All of this is so that they don't have to pay their share. Yeah. So it's going to be on us. We're going to get poorer and poorer and poorer while they get richer, richer, and richer. And nobody's going to care about you. There are no programs in place. There's nothing to help. So here we go. I don't get it.
Stock market is in total free.
So this is just us reacting to the streets. I like to come to see what the people are talking about. You already see what the mainstream is talking about. They're pushing fear. And I think the people are buying into the fear. That's what I assume, you know. There's nothing to fear as long as you know how to, if you understand the mechanics of money and how money works, you will see opportunity right there in front of you. But again, most people listen to mainstream. They wait for the narrative to come to them. And then they react off the narrative. And most people don't know what the hell they talking about because there's definitely massive opportunity right there in front of you.
Free fall and the market is about to crash completely. I'm talking 2008 numbers. This is going to get bad. If you didn't see it, Donald Trump put those tariffs in place on Mexico, Canada, and China, you know, our three biggest trade partners. And as a result, United States markets have been in a total tailspin since roughly yesterday afternoon. The markets actually shut down early yesterday to try and prevent a crash, hoping that, you know, Donald Trump would reverse course when he saw what was happening to the stock market. And instead, because he has done nothing to reverse what is happening to the stock market because of his tariffs, when the market opened again today, it is in complete free fall and nothing is going to stop it. So here's what Donald Trump is probably going to do in the next couple of months or maybe even years. He is going to allow this trade war to continue because it's not going to hurt the ultra rich in this country. In fact, it's going to allow them to buy up even more property, even more assets, because there's going to be a bunch of people who can't afford to hold on to it and are forced to sell. This is what we call a wealth consolidation event, when the ultra wealthy class uses financial crises to pressure those in the middle classes and lower to sell off their assets so that the rich can buy them and hold on to them to increase their own value while simultaneously decreasing the financial mobility of the middle and lower classes. And Donald Trump knows this is going to hurt the average American consumer. He knows it's going to stress them out, that it's going to make a lot of them go homeless, and he's going to let it continue as long as he can until he thinks he's at the breaking point, and then he's going to reverse. He's going to undo the tariffs, and he's going to try and convince Canada and Mexico to undo their retaliatory tariffs, and then when the prices magically come back down from the crisis that he created, he's going to try and convince you that he is the one who solved the problem, that he is the one who made things affordable for you again. This is a
So with knowing that, why not take advantage instead of complaining? Why not take advantage of the opportunity? That's all I'm saying. Like, if you know that that's a possibility, then you should be like changing your mindset and telling people, hey, this is going to be an opportunity, instead of saying, oh, you know, Trump is going to be the hero, da, da, da. No, you see the opportunity, you take advantage of the opportunity.
Classic abuse tactic, and it's a classic dictator tactic. Take away something that the people absolutely...
What y'all think his political party is? You think he's a liberal? What y'all think he is? A Democrat? Because me, I'm a capitalist, so I'm not here on either party. I see opportunity. You know, the whole entire world runs on money. So as a capitalist, hey, we take advantage. We don't sit back. We don't sit around and complain. You just take advantage.
Need for just long enough to make it hurt, and then give it back to them and claim that you saved it for them. The problem is he may have moved too aggressively, too fast, because this isn't just going to hurt the average American. This is going to hurt big companies. The billionaires at the top are going to be fine, but the companies are going to be taking massive hits because pretty much every American company that relies on the ability to export their goods is going to start seeing their values drop across the board. You know that one rule of American politics? Don't mess with the magic line? He's messing with the magic line. And it will be interesting to see how that ends up.
Well, we are finally here. This is the third month of the year, and back at the top of January, I made this video talking about why I sold out everything that I had at the top of January, or sorry, at the top of December, and it was because of exactly what is happening right now, driven by the current administration and its policies, poor economic data, overvaluations, quite literally everything I was talking about. And there's plenty more that I left out that I didn't want to divulge into, but those are also occurring at the same point in time. There is a dramatic issue here, right? People are being squeezed. And when I say people, I'm talking about you and me, average middle class people, or anyone that falls below the middle class income line, right? Suffering. And this is because the system is being rigged for the rich and oppressing the less fortunate through inflation, okay? Our buying power is weaker. Costs are going up. And all those things are starting to show themselves within the economic data, even though it was already present in the economic data. And all the economists and just Wall Street analysts have been propping up as though this economy is strong. It's not strong, okay? It's a select few people, the small percentage of this entire country's population, are owning and purchasing all of the activity, all right? So when they do bad, everything else is bad. That's how linked they are. That's how much power they have within this current economy, and it's all coming to fruition now, right? So, very, very shitty situation. Market's going to continue to tumble. This is far from the bottom, and it's only going to get worse as these tariffs are implemented, the effects are realized, and the other linked effects that come from these poor financial and political decisions go into effect. So as a person that's, in this current climate, you're wondering what to do, save as much as you can save, if you can save.
Hey everyone, wanted to tell you about one of the best deals we have going on the internet right now. It's the buy one, get one free deal on our world famous Paleo Pathway chocolate bone broth protein powder. And it comes in vanilla too. And
so what I was going to say was, I'm over here having some technical difficulties, but instead of saving, yes, save, but you also got to be able to take advantage of the opportunities that are currently in the market. So that was the streets. Let's go ahead and come to the crypto matrix. Let's go ahead and start doing some analysis, getting into the charts. That was just what the people had to say. Before I look at the crypto matrix, I wanted to show you that the stock market is down, it's bleeding. They're blaming it on tariffs. Even in the stock market, there's opportunities, and I'm going to cover some futures trading with the S&P, the Nasdaq, and Dow. I'm gonna show you that, hey, there's opportunity shorting the market. So while they're pushing fear, there's somebody on the opposite end profiting off of this sell-off. And that's what I show y'all, and that's what I teach y'all in this on my live streams and on my channel. I show y'all that there's opportunities going in both directions of the market. So look at the crypto matrix. We got XRP currently trading at $2.14. Did y'all take any advantage today or this week in the market? Did y'all take any advantage? We got XLM trading at 25 cents. We got XDC trading at 6 cents. We got HBAR 16 cents. We got Bitcoin at 82,000. We got Ethereum at 1,700. Ethereum is not looking good. We got Algo 18 cents. We got Solana, $118. Let's go ahead and check this out right quick. I want to come over here before I get into the overall market. Let's go ahead and talk about what I seen yesterday, and this benefits me directly. So let's go to Trading View. No, not Trading View. Well, we can look at Trading View, see what they had to say. Who caught that news yesterday as far as the Coinbase? Coinbase files for XRP Futures trading. Did y'all catch that? And y'all know that I'm a futures trader and I teach futures trading. So that's a big deal. And I'm going to get into it here in a minute. And I've been preaching for people to move away from an unregulated environment, trading on unregulated exchanges, And I've been saying, I tell people I don't trade crypto until it becomes regulated. So here we are, we're getting closer to regulations. And Coinbase files for XRP futures contract is a big deal. So major crypto exchange Coinbase has filed for XRP futures trading with the U.S. Commodities Futures Trading Commission, CFTC. If you ever watch my disclaimer at the beginning of the video, I'm giving you a CFTC disclaimer directly from the CFTC. So this is what I'm talking about. The CFTC, who regulates the futures markets and the derivatives, Coinbase has filed through them. So we're getting that regulated environment. It says the CFTC regulated derivative exchange Coinbase Derivatives has filed with the regulator to self-certify XRP futures. And I'm going to expect this from other futures exchanges or other exchanges. I'm going to be looking for the upholds, the other large exchanges to start offering some type of futures products. And that's when I will enter the market. Let me see. Coinbase Derivatives has filed. I read that already. It says the team says this will enable it to bridge a regulated capital efficient way to gain exposure to one of the most liquid digital assets. Yes, this is a big deal for me. And so a lot of y'all that trade pairs using USDT, it's time to move over. It's time to let Tether go. You need to step into a regulated environment. And that's what I've been preaching, trying to walk you through the right path on how to do this. Let me see right quick. Echelon, he said, crypto has shown me through this time that it is truly showing itself as a long-term asset. It is weathering the storm and is still performing. No gimmicks and no BS. Yes, that's because the institutions have entered the market. Echelon, the institutions are here. Let me see. Coinbase says, we're excited to announce that Coinbase Derivatives has filed with the CFTC to self-certify futures, bringing a regulated, capital efficient way to gain exposure to the most liquid digital asset. We anticipate the contracts to go live on April 21st, this month. So they're going live April 21st of this month. Stay tuned. Coinbase Institutional. And then it goes into the contract size. The contract size is 10,000 XRP, as one XRP is currently worth, read this, and this is for the futures trading. The contract size, so when you take out one contract, and this is pretty much leverage trading for y'all who don't understand what futures trading is. When you take out one contract, the value of that contract will be $10,000 or 10,000 XRP, excuse me. As one XRP is currently worth around $2, the contract is worth $20,000. So put that in perspective. As also, Coinbase will initially offer 3 front months of the contract for trading. Trading in the XRL contract is also subject to a price fluctuation limits as a safety measure. If the limit is hit on the lead month of XRP or XRL, I guess that's going to be the ticker XRL. So I'm gonna be looking for that XRL, which sounds like that's going to be the contract symbol XRL. It says XRL contract is also subject to the price fluctuation limits as a safety measure. If the limit is hit on the lead month of XRL contract, all related instruments will be halted. Trading will be halted if spot XRP prices change above the 10% limit in an hour. So that's when volatility come in and they would have to pretty much pause. So that's the regulation I'm talking about. So if there's some type of drastic swing, some major move in the market, and you're leverage trading or you're trading futures, and it goes above 10% in an hour, they will pretty much pause the futures market because that's a drastic swing. That's a lot of volatility in the market. And, you know, people are taking on a lot of risk when trading futures. It says, additionally, there is a position limit to an aggregated of 4,000 XRP or XRL contracts, which is equivalent to 40 million XRP. The document says you might also, what they say is like, they got a lot of typos in here. What is this? Like a little, I can't even say that. Drops Coinbase staking lawsuit. Okay, whatever. In March this year, Coinbase announced that it plans to launch. Okay, this is a big deal. This is a big deal right here because current brokers and exchanges don't offer this in a regulated environment. So it says in March of this year, Coinbase announced its plans to launch 24/7 Bitcoin and Ethereum futures trading through Coinbase derivatives. So I'm going ahead and be signed. I haven't used Coinbase in years, but I'm gonna go ahead and start signing up for this. This was the first opportunity for U.S. traders to access a perpetual style futures contract without an expiration date. So 24-hour trading is coming. 24-hour trading is coming in a regulated environment. 24/7 trading access to Bitcoin and Ethereum futures is coming to the US. No market hours, no waiting, no missed opportunities. And that's why I say when I'm showing y'all the session hours, different times of day, I'll be showing y'all that the markets are 24/7, and depending on where you live at or your lifestyle, you can get in the market at any time of the day. It says, furthermore, in February, Coinbase introduced CFTC-approved futures contracts for Solana, Hedera. Oh, yeah, they got Hedera HBAR futures contracts as well. While in late March, it added Cardano in the mix as well. So here we are. We got XRP coming as well. It said in July 2022, Coinbase derivatives also launched margin futures contracts for several major cryptocurrencies, including Avalanche, Chainlink, Polkadot, XLM, and Shiba. So for me, this is a big deal. 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 So hopefully y'all caught that. Or matter of fact, I'm on TradingView right now. So the first thing I like to look for is, okay, is Coinbase integrated with TradingView? Because if y'all don't know, I use TradingView for a charting platform. And I like to use exchanges and brokers that are integrated. So what I did was I went to, let's say, brokers. On TradingView, see where it says brokers, I select that. And then right here, it says where it says all brokers, stocks, crypto, I'm gonna select crypto. And then you see where it says Coinbase Advanced, tradable assets, crypto. That's what I want to click on right there. So Coinbase, if you're looking to start trading futures and come out of that unregulated environment where you're trading tether products, you want to come to a regulated environment where you can't get rug pulled. They can't run off with your money. They can't do none of that. It's all regulated. It's all regulated. So you come to TradingView, Coinbase Advanced. I'm gonna go ahead and select on it. You could come down, read about it. It says Coinbase Advanced. Look, there's a zero minimum deposit amount. So whenever you sign up for this, you don't, most traditional exchanges, and traditional brokers, they offer you, they require you to have some type of minimum deposit. Well, this right here says that Coinbase Advanced, you don't have to have no minimum deposit to sign up and get started. And then look, this is what you want to see right here. Regulators, CFTC, that's a huge deal. And FinCEN, that's a huge deal. So you always want to come to a regulated environment. And then it talks about crypto information. But the one thing I like to do is, okay, you know that they're integrated on Coinbase. Coinbase is integrated on TradingView. So now when you sign up for TradingView, Coinbase, you can go directly to TradingView and start trading. I'm gonna go to their website. Let's go to the website. This is Coinbase.com. And then this is where I'm gonna click on right here, futures. And then it takes you to Coinbase Advanced. And it says now trade futures. Futures contracts built for the retail investor. It says futures products and services on Coinbase Advance are offered by Coinbase Financial Markets, a member of NFA and is subject to NFA regulator oversight and examinations. However, you should be aware that NFA does not have regulatory oversight authority over underlying or spot virtual currency products. So that's the digital asset. So don't y'all get it confused. This isn't buying the software, the digital asset. This is hedging, where you're betting on the market whether it's going to go higher or lower, and it's a cash market. It is a cash market. So you're going to be betting on whether it's going to go higher or lower. That's what I show y'all when I'm demonstrating my trading. When I'm in the charts and I'm analyzing, I'm showing y'all, hey, the market is going into a buy program. The market is going into a sell program. And I'm showing you how you can short the market or where you can buy the market. This isn't investing like when I'm on those higher time frames, when I'm showing you, hey, for you long-term investors, this is how you should analyze the market. And I show y'all that y'all have to be patient, wait, and you're buying the underlying in the spot asset. This isn't that. Futures trading is not that. So I want to make that clear. This is more for the savvy traders, the more savvy investors who want to cash flow. And currently it says you could trade up to 15 contracts. You could trade up to 15 contracts at one time. So do y'all remember when I give y'all my my examples? Like when I break down the charts and I say, hey, when I give you my trade examples and I show you, hey, you can add more than one contract. Well, they're saying you can add up to 15 contracts per trade. And then as I scroll down, you can see, for example, this is what they currently have to offer for Coinbase futures. They got Nano Ethereum. They got Nano Bitcoin, Nano Solana. They got Hedera, Litecoin, Bitcoin Cash, Dogecoin Gold, Nano Crude Oil, Avalanche Chainlink, Polkadot, Shiba, Silver, Stellar, and then they're about to add XRP here on the 21st. So on the 21st, they're going to add XRP. Let me give you an example right quick. I'm going to click on HBAR. And I'm going to be looking forward to trading HBAR. But at 5,000 Hedera per futures contract, this contract allows participants to manage risk, trade on margin, or speculate on the price of HBAR. And then you could come to TradingView. You could learn more information. Let's click on that. And this is what you want to see. You want to see this type of stuff. So this is on paper. So you can print this out. You can download it. But it says Coinbase derivatives. And then it gives you contract description. Hedera Futures is a monthly cash settled. So that's a key thing right there. Right there. It is a cash market. This isn't buying the digital asset or the digital software. It is a cash market. So HBAR Futures is a monthly cash settled and margin index futures contract. So it's an index. No different than the S&P, the Nasdaq, and the Dow. And I'm going to talk about this here in a minute. It says each contract represents 5,000 Hedera or HBAR at the current price of approximately 30 cents. I think it's a little lower right now. So, and then you can scroll down. It says contract specifications. This is going to be the contract code. So the ticker, which is HED. So if you want to trade HBAR futures on Coinbase, you're going to look for this symbol on, Let me go ahead and give an example. Let's come to TradingView. Come to TradingView right quick. On TradingView, I'm gonna come over here in the top left hand corner. I'm gonna type in HED, and there you go right there. HED. You see Hedera? It says futures, Coinbase derivatives. Select it, and clearly this market just began. It just began. Like, here we go. This is the regulated environment that I've been talking about. So this just started last month. And here we are in the year of regulation and regulatory clarity, and they're already pushing these products to the markets. And I'm going to be waiting for April 21st for the XRP derivative contract to come. So this is HED, which is Hedera Futures. I wouldn't be trading this at the moment because doesn't look good at all. I wouldn't jump in this right now. It needs more data. It needs more price history. But for right now, I'm just showing y'all an example that these markets are coming. These products are coming to the market. These products are coming to the market. Make sure y'all hit that like button for me and subscribe. But that's how you come. I'm excited for this. I'm going to be paying attention to this. If you want to learn trading, if y'all want to learn how to trade, y'all make sure y'all sign up for my Patreon as well. Subscribe to the channel. Come over to Patreon. I got some beginner lessons and I'm about to start producing the pro lessons. So if y'all are interested in coming to learn how to do technical analysis, sign up for my Patreon. And I don't think you will regret it neither, because I got a lot of good feedback. So let's go ahead and come to the markets. Let's talk about XRP. Let's go ahead and get into XRP. Make sure y'all hit that like button. I got 40 people in the live stream. Make sure y'all hit that like button. Subscribe for me. Subscribe, hit that like button for me. This is a monthly time frame. Matter of fact, before I come to that, let's look at the economic calendar. Let's come over to the economic calendar. This was the news for the week. High impact news. We got all this out the way. If you notice, this week we didn't have not much going on in the market. And I told y'all last Sunday, I told y'all ahead of time that this was expected. How many of y'all I told that, hey, by Wednesday, get out the market and expect a lot of volatility and not much going on? And I also said, hey, I'm going to skip the first week of April because of all this high impact news. And then when I go into the chart, you will see the impact of all this high impact news. So let's go ahead and come out to the next week. Let's go out to look. Let's go ahead and forecast from April 6th to the 12th. Appreciate it, Lawrence. Appreciate the feedback. Let them know that Patreon is coming in hot. And yes, it's some value in there. It's some great value. So this is the economic calendar for next week. We have a semi-heavy / light week because Monday, Tuesday, there is no news. So here we are coming up Monday and Tuesday. Remember I said this. I'm not expecting nothing in the market Monday and Tuesday because there is no news drivers pushing the market. But from Wednesday all the way through Friday, which is midweek, going into Friday, we got a lot of high impact news. We got CPI data, we got FOMC meetings, and we got PPI data and inflation announcement. So expect some volatility from Wednesday and Friday. And then let's go ahead and forecast out. And I'm going to consider this the first week of April, by the way. This is going to be the first week of April. Now let's go ahead and forecast out to the 13th and the 19th. So on this week right here, I'm going to expect some volatility because it's a light week. There's not a lot of high impact news. We only got 2 days of high impact news, and I'm going to expect some type of volatility to pick up in the market and the market to run a little cleaner during this week. So remember I said that. I'm saying it ahead of time. And how do I know this? How do I know how the market is going to perform ahead of time? Because the markers are algorithmic. If you're new to my channel, the markers are ran by algorithms. And during these specific times of the day when the news releases, I can anticipate different profiles that the market is going to behave, how the market is going to behave, because the market repeats over and over again. It's not random. They repeat over and over again. So let's go ahead and come to XRP. Here we are. We got 25 days left to complete the month of April. We just began the second quarter of 2025. First quarter, we was chopping around, not doing much. So far this week or this month, again, we're trapped inside of a range. We have not taken out the previous month's low. Well, let's look back during March. March, we were stuck in the range. We didn't go down and take out the previous month's low, nor the previous month's high. So here we are, first week of April, and we just pretty much consolidated during the first week. So this market is about to pop. If y'all don't understand, if y'all not seeing what's going on as far as like, look at the sentiment in the stock market, look at the tariffs, something is coming. I don't know what's coming. And like B Rush said, this is the Black Swan event. So they could potentially be rolling it out with economic pain. That could potentially be a black swan. The economic pain could be a black swan. So, oh, what's up, Big Dre? Shout out to you. Shout out to you. This could be the economic tariffs and all that can be leading up to something larger. I don't know. I'm not, I just keep up with the markets because I can see the moves ahead of time. Before they announce, oh, we're in a recession, before they announce all these other things, I'm already analyzing in the market. I already told y'all, let's go out to the 3-month time frame for XRP. Here we are just ranging, consolidating, and it's looking like it wants to go higher. Currently trading at 212, but you cannot ignore this large gap in the market. You already know that the stock market is crashing. You already know the stock market, not crashing, but it has reversed, and now they're looking to find cheaper opportunities, but there's opportunities to short the market. But for XRP, institutions are going to want this at a discount, in my honest opinion. Here's a BISI, fair value gap, buy side imbalance, sell side inefficiency. And again, they're just holding price. They're allowing sentiment to build up. They're allowing the sentiment. So how many of y'all purchased XRP this week? Let me know in the comments. How many of y'all pulled the trigger and purchased XRP this week? Y'all let me know. Who pulled the trigger this week and purchased digital assets? Anybody? Anybody pulled the trigger? I'm assuming somebody did. Claude, you said you did? I know a lot of y'all did. I got 44 people in the building. Make sure y'all hit that like button. Waiting for it to go lower. So Claude, you show up all the time, Claude. Why did you pull the trigger? Why did you pull the trigger so soon? Big Dre, you said not me, not yet. Coleman, you said you're waiting. Echelon, you said you did. So if y'all watch my channel, why are y'all pulling the trigger? Not even at $1.96. Oh yeah, what's the guy name? What's the guy's name? Center. We did okay. This week we did drop below $2 because I had somebody say we're not gonna drop below $2, but we went down to $1.96 this week. Flipping pages, you said you waiting. Lenny, no XRP. So some of y'all bought purchase and some of y'all didn't. But if you've been watching my channel, you should know that a larger opportunity is sitting there right there in the market waiting to be targeted. Echelon, you say you pulled the trigger at $1.99. H-bar. So if y'all are purchasing, y'all are pretty much getting caught in between. Y'all are getting caught in between. But look on the monthly time frame. We got the monthly fair value gap. Remember, the higher time frame has more influence over the lower time frame. So right here is a 3-month fair value gap. But right here is a monthly, and we have been ranging and consolidating inside of this monthly gap. But I'm not going to ignore there's a lot of liquidity below the market, a whole lot of liquidity resting below the market. And if I'm the market makers and if I'm smart money, I'm going to want to come down and take out that liquidity. I'm going to want to purchase at a discount. We got 25 days left to complete April. Let's go down to the weekly. We're going to have 4 weekly candles in April. I believe last week I asked y'all, what side of the market do y'all see price reaching for? Last week I asked y'all, what side of the market do I see y'all? What side of the market do we see price reaching for? A lot of y'all told me the sell side, and that's exactly what we did. We traded down. Do y'all think it's random? Do you think it's random that the market trades down into this gap right here on the monthly time frame and reject it? And now look at the weekly candle. Each one of these candles takes 7 trading days. 7 days. So we got 1 day, 9 hours left to complete this candle. The week is done. I'm done for the week. That's why I forecasted out into next week and 2 weeks from now. So here on Sunday, which is tomorrow, I will go live tomorrow. We're going to open up this new Sunday or this new weekly candle. But the only thing we did so far this week was we took out we took out some liquidity above the market, and we took out the liquidity below the market, and we dropped down the discount. That's all we did so far this week. And the market profile is still in the consolidation. So they're waiting for something. They're holding the market. This consolidation is a holding pattern. And we're waiting for institutions Institutional sponsorship. What is that? Institutional sponsorship is when the institutions come in with capital, liquidity, and drive the market either higher or lower. That's what we're waiting for. And you're going to be able to see it in the market. They're going to want to attack liquidity. So it's looking, I'm on the side of coming down, take out sell side liquidity below old lows. Some of y'all might be thinking we're going to come higher. I want to see them come down, liquidate these lows in the market. Let me go out to the 3 month right quick. Now let's go down to the daily. On the daily time frame, we just consolidated all week pretty much. On the daily time frame. Let me read the comments. Boss, when it drops down to that fair value gap, is it fair to see it could stay there for 1 to 2 months, or would it bounce back fairly quickly? ZZ, all of those are possibilities. I think I told you that, ZZ. And you was telling me, I don't want to see that. But I'm sitting here telling you that's a possibility. That it can drop down there for, especially if y'all paying attention to the sentiment. What's the sentiment right now in the overall markets, not just crypto? What's the economic sentiment right now? What are they talking about in mainstream? What are they talking about? What's the economic sentiment? What's the economic sentiment? And what would give them a valid reason to drop the market way down here and hold it for a few months until some type of, rescue, save the day. Trump might want to save the day with something, with some type of regulations or executive order. Yes, y'all are right, extreme fear, but the sentiment is recession. The sentiment is recession, right? Am I right or wrong? Aren't they starting to talk about a recession coming? Isn't the stock market moving lower? My own dad was like, man, the stock market took a dip, because how many of y'all have been working for years and have 401ks? Have y'all noticed that your 401ks aren't looking like it normally does? I'm just asking. So people that have 401ks, I would be nervous. I'm not going to lie. 78.90. Yes, recession. The sentiment is recession. We're seeing recession talks pick up. We're seeing tariffs pick up. So you already know the tariffs are going to have it's already having a large impact on products and services. So that's pushing that recession fear, and also it could be the black swan. So if that is the sentiment, it's already built in the market. So look below the market at this fair value gap. You see that? Look below the market at this large gap in the market, which is a void in price, which is a discounted opportunity. Let's go ahead and throw up the Fibonacci again. Damn, I didn't save it, but let me, I guess I got to freehand it again. Let me draw it out. Let's throw up the fib. Echelon, you say, yeah, they've been talking recession since Trump first announced reciprocal tariffs. Yes, that's the sentiment right now. Pay attention to the all of these things, which are more fundamental. I was already highlighting a lot of this. So it's already built in the market, what I'm trying to say. These things are already built in. There's nothing to panic about. There's opportunity coming if you become strategic and know what you're doing. Because if there is a so-called recession coming to the markets, the tariffs are having a lot of impact on the markets. There's discounted opportunities to come to the market. So if you still have a job, you're maintaining, you're stacking cash, you're saving money, you're living frugal, you will be able to participate in what's coming. I'm not fear at all. And then I also show y'all how there's opportunity trading and shorting the market as well. Hint, XRP futures trading. So I can be bearish right now on lower time frames and trade and hedge. So for the people that are panicking, now let's get into this. For the people that are panicking, thinking, oh, the market is crashing, we can hedge against that, learn how to trade and short the market down to discount. I've been teaching y'all this the whole time. I've been showing y'all this the whole time, how you can go against the grain, go earn cash, hedge the market and go lower, short the market down to this discounted area if we decide to come down here. I got you, B Rush. I'm gonna go here over there in a minute. I'm gonna check it out here in a second. You said XDC. I'm gonna look at it in a minute. Let me see. Lawrence, we have been in a recession. They are just now admitting it. Yeah, I feel you, Lawrence. I understand that. But what I'm trying to tell y'all is learn this skill set. Go sign up to my Patreon. Learn this skill set. And as they're pushing fear, who is they? The mainstream media, the media, social media, the distractions, all the noise. As they push fear, I will be trying to find opportunity to short the market, earn cash. So if you're already working a job, you're saving, you need to learn this skill set, learn how to trade, short the market, and earn extra cash so that you can accumulate the spot, the underlying asset, which is the digital software. Let me go ahead and look at the rest of the market right quick. I'm gonna come back to XRP in a minute. Again, nothing going on, nothing drastic. Let's go ahead and look at XDC, XLM, HBAR. Let's pull up XDC. And again, this is going to be a rhyming pattern for a lot of y'all. A lot of the same market structure. So this is XDC on the 3-month time frame. Here we are. Do I need to compare charts? This is XRP. Go out to the 3-month. Look at XRP on the 3-month time frame. You see that large fair value gap, discount. Let's go look at XDC, 3-month time frame. Again, a large fair value gap, discount. Also, we got this down close counter right there. I'll let y'all determine what that is. But again, XDC currently trading at 6 cents. If I lay my Fibonacci from the high down to the low, those are the different ranges and price levels that price can reach for to offer that discounted opportunity. So look, check it out. 6 cents. We got 5 cents. The midway point of the gap, 4 cents, 4 cents, 3 cents. XDC is such a quiet asset, and most people in crypto still don't know about XDC, that it's just a discount overall. So buying it at 6 cents and getting it at 5 cents, there's really no difference, to be honest. And it's it's still early on for this asset. So it's still pretty much in the basement, in my honest opinion. Let's go to XLM. Let's go look at XLM. This is XLM. Go out to the 3-month time frame. What I'm looking at for XLM, we got this old gap in the market, 3-month gap that formed during 2017 right here. There's a large void in the market. You can see how many times we dropped down to this. I'm going to believe that if there's recession talks and tariffs and pain in the economy, they're going to drive XLM down to these price levels. Let me lay a Fibonacci from the high down to the low. And let's say they want to drive it back down. You're going to be able to see an opportunity around 20 cents, 15 cents, potentially 11 cents. But I'm going to stick to the higher quadrants, which would be around 20 cents, 15 cents. And you can already see what price is trying to do. This is the quarterly time frame. You already can see where price is reaching for. It's going to want to reach for liquidity below the market. Let's go down to the monthly time frame. Here we are. You already can see that deep retracement. The blue highlighted area, that is a monthly fair value gap. Remember, the higher time frame has more influence over the lower time frame. So the 3-month has more influence over the monthly. And you can see price wanting to reach down for liquidity below the market and offer some type of discount. So be on the lookout for XLM. Everything is coming down. This is what I'm saying. If the stock market is coming down and they're preaching recession and pain in the market and tariffs, they're breeding this economic pain. Let's go look at HBAR. Oh, HBAR. You can already see HBAR already traded down this 3-month time frame. It already traded down to its 3-month fair value gap. If you was looking to purchase H bar, you should have set your limit order and it would have triggered you in. So far, we done dropped down to 15 cents. We done dropped down to 15 cents. It's currently trading at 15 cents, but I want to see it trade inside of this gap and come lower. Potentially 13 cents, potentially 11 cents, the midway point of the gap. So definitely be ready for H bar. I just showed y'all how Coinbase has H bar futures. So you could potentially be dropping down to lower time frames. Let's go down to the 15 minute. See the 15-minute time frame? Check it out. All right, you can just look at this and glance at the market. It's coming down lower. Y'all tell me what this is right here. What is this right here? This swing low. What is this? What does that represent? And this is for H bar. Y'all tell me in the comments. What does this swing low represent right here in the charts? Make sure y'all hit that like button, subscribe to the channel if y'all brand new. Hit the link in the description to sign up to the Patreon. What is this swing low? Who knows what it is? Liquidity. Shout out to you, Lawrence. What kind of liquidity though? What kind of liquidity? Yes, this is liquidity, but what kind of liquidity? And if you don't know, the price always seeks liquidity because the markets are algorithmic. Price always seeks liquidity. And this is for H bar. And this is what I'm saying. If you sign up for, if you learn this skill set, you can learn how to short the market, sign up for Coinbase, learn how to trade, sign up for the futures, and they got H bar derivatives. Sell side liquidity. Shout out to y'all. Sell side liquidity. So I'm gonna highlight that low right there. We're outlining the market. This is how you frame up the market. We know there's liquidity. The market always seeks liquidity. That's sell side liquidity right there. Okay, what market profile is H bar currently in? What's the profile? What's the profile? What's the market profile? Y'all let me know in the comments. What profile are we in? Waiting on y'all. What is the current market profile? Anybody knows? It's not a retracement. Not on this time frame, at least, Omar. We're on the 15-minute time frame, so we're looking at the market intraday. This is intraday price action. I'm trying to teach y'all how to short the market, sign up for derivatives contracts. I mean, sign up for Coinbase to trade futures, and sign up to the Patreon to learn the skill set. We are in a sell program. High resistance as well. A sell program, meaning order flow is bearish. Order flow is bearish. We're in a market maker sell program. There y'all go. We're in a sell program, expansion sell program. Okay, now that y'all identify the condition, the market profile, okay, we understand we should be looking for shorts. Anytime we're in a sell program, we should be looking for shorting opportunities. Okay, what is this right here? What is this? What is this? Shout out to you, Ed. It's a SIBI. It's a sell side imbalance, buy side inefficiency. It's a sell side imbalance, buy side inefficiency, which is a fair value gap. It's a fair value gap. It's an opportunity to get in sync with the market and short the market. So do you think it's random that how the market creates this gap in price and it trades back into it? Now it's showing weakness to go lower. So what we just did was we framed up the market. You can find opportunities. Let me come back over here. Let me come back to Coinbase. This is Coinbase. See H bar, Hedera. Learn more. It says minimum. Look, check it out. Minimum tick size and value. Minimum tick size. And I don't know the per Hedera. So this is Hedera. This is the unit or the ticks. The units per tick. So it's 0.00001 tick per Hedera. Each tick value represents 5 cents per tick. 5 cents per tick. So for every tick, that's 5 cents. Y'all see that? For every tick, there's 5 cents. Now let's come back to the charts. Here we are, Hedera. If you look over here all the way to the right side of my screen, current price, 0.15967. For every tick, so it just ticked up to 6.7, 6.8, that's 5 cents. So it's fluctuating. If we're trying to get short, for example, matter of fact, let's do this right quick. I'm gonna show you the entry, how to enter. You want to set an entry point either at the low, the midway point, or the high. Let's go ahead and say we entered at the midway point right there. Boom. See that? Midway point of the gap. That's the midway point of the gap right there. And what I'm gonna do is I'm gonna show you the take profit or the risk to reward. I'm gonna show you the risk to reward of this trade setup. So we come over here. There's this tool on TradingView that you can use. It says short position. I'm gonna select that. I'm gonna place it on the entry right there. I'm gonna drag it down to the take profit, which is this old low that I outlined. And your risk would be the top of the fair value gap right here. Top of the fair value gap. Let me highlight your risk. And I'm gonna need y'all to get y'all calculators out. So get your calculators out and we're gonna show you what trading H-bar futures looks like. We're putting the money behind it. Right there, that's your stop loss. So you can see there's a clear stop. There's a clear stop loss. If it comes up, it takes you out, you're out the market. We only look for 1 or 2 trades per day. Don't take more. If you lose both trades, don't take any more. 1 to 2 trades per day. If you have a good winning trade and it's just 1, don't take the second trade. These are rules and protocols that I teach and that I talk about. So the risk to reward is, let's say, get y'all calculators out. And I'm new to trading Hedera in these units because in the traditional market, it's not this complicated with all these drops or whatever you want to call Hedera's ticks. So check it out. Let me pull my calculator out. Remember, every tick, do I need to come back over here? Every tick is 5 cents. 5 cents per tick. And this is the unit for Hedera right here. Let me zoom in a little bit closer. I can't zoom in any closer. But are y'all following me? Every tick, which is over here 0.0001, or excuse me, 0.00001, that's each tick unit. And for every tick, that's 5 cents. Okay, y'all follow me. So your stop loss, which is your risk. Let's do some math. Let's do some quick math. Remember, we're going to add 5 cents to every tick. So you're risking 0.00057. And you're going to multiply that. Damn, this shit is confusing right quick because I never traded crypto futures. I never traded crypto futures. For example, if I come over to the Nasdaq, it's way simpler. It's way simpler. ES. It's not as many digits on the back end. So I'm trying to calculate this and learn how to do this myself. Let me see right quick. The risk to reward ratio is 5.26. And let me see right quick. The hell? I'm trying to figure this out, y'all. I'm trying to figure this out. I'm trying to do the math behind this and how to calculate. So our entry point is say you're gonna be grabbing DAG all summer. Entry to stop, which is 36%. You're gonna be risking 36%, but I'm trying to calculate 0.00057 times, is it 5 cents? I'm not sure. I'm not sure how to calculate this. Shit. I'm going to have to sign up and trade with it and mess with it. But this is pretty much your risk to reward. So let's say you have let's say you got $10,000. Your stop loss is 36%. So let's take $10,000 times 36%. What is that? 0.36%, not 36%, 0.36%. $10,000 times 0.36%. What is that? Y'all tell me in the comments. Hopefully y'all got y'all calculators out. Shout out to you, Raven. It's $36. So on this, if you was to trade Hedera Futures, which is this H bar, and you take 10 grand, that's what you're going to place in your Coinbase account, 10 grand, and you go out and go ahead and hedge the market. You know that Hedera potentially can come back down to discount, but we want to earn some cash before we get down there. You start with 10 grand, and this is not the spot. This is the cash product. 10 grand, we're going to risk $36 for a return of 1.87%. So 10 grand times 1.87%. What is that? I've been well, Raven. Shout out to you. I've been well. Shout out to you. And you can already see the market, what it's trying to do. You already can see what it's trying to do. Look what it's trying to do. It's leaving the fair value gap. It's going to want to come down and take out the liquidity below the market. And if it decides to drop down below the market, it's going to want to come down to that 3-month fair value gap as well. So, and then that's when you cash out. Once it comes down, take out the liquidity. I got 187, Lawrence. I got 187, $187. But it's going to want to come down, take out the liquidity below the market. And after you cash out, that's when you go in and accumulate the digital assets. So we're hedging. I'm showing y'all how y'all can hedge against the bearishness in the market. Y'all can see the market wanting to trade lower. So I'm going to be watching that right quick because I'm going to want to get in on H-bar coming down to discount. Let's go ahead and look at the stock market as well. So here we are right here. You already see the headlines, the Nasdaq, the S&P, the Dow Jones. They're all doing the same thing. And I've been calling this for months. This was a large day. How much money was wiped out in the stock market? Let me see right quick. So this right here, let me zoom in on it. It says the U.S. stock market has wiped out 9.6 trillion since inauguration day. 9.6 trillion since inauguration day. That's a lot of money, ain't it? That's a lot of made up of money as well. 9.6 trillion since inauguration day. So we can estimate that. And if we come over here to the Nasdaq, well, since inauguration day, this was in February. So during January, which was the month of inauguration, I believe, the market just consolidated. And during that month, I can go back and show y'all where I was saying, hey, this market is due for a correction because it was overly extended. There's no way this market could have continued to go higher with no type of pullbacks. And here we are, The market is currently closed as well. So I'm going to anticipate next week when the market opens, 9:30 a.m. Monday, when the market opens, it's going to gap lower, and next week is still going to be brutal. Look at this sell-off. And that was a low resistance week as well. But you already know what it's looking for. It's taking out sell side liquidity below the market. There goes liquidity right there. And I've done this before. I'm gonna have to go clip it up months ago where I was clipping up. Hey, what is this right here? Look at the liquidity below the market. Look at all this liquidity. Old lows below the market. Let's go out to the, let's say, monthly time frame. Let's go out to the 3-month. Okay, on the 3-month time frame, there is a small little BISI right here. I'm going to highlight that. And this is for the Nasdaq. This is for the Nasdaq. Boom, right there. So there's a 3-month fair value gap below the market. Remember, that's an inefficiency. They can drop it down there to fill it in, or we can trade through it, or we can use it as a support level. That's if the market wants to come down. Right now, it's 17,000 Nasdaq, 17,539. If it wants to come down, you're going to start looking at a 16,300 NQ market. That's going to be a lot of wipeout. And if they want to get real crazy, what will be a real recession is if they want to drop the market down below these lows right here. Look at this low in the market. That's when you know, okay, shit done got real. If they bring it all the way down around 10,000, the $10,000 range for the Nasdaq. But we're a long way from that. But hey, look what's going on. We are entering a market structure shift, and we went from a buy program. Now it's the beginning stages of a sell program. But let's see what they want to do. John, you said that would be crazy. It would, and that would be a lot of pain in the market. That would be a lot of pain. But I'm going to go ahead and tell y'all, we're going to drop down and take out the liquidity below the market right here. They're going to want to come take out this liquidity. And then my next step, my next pass through on a higher time frame will be right here. Look at this sell side liquidity right there. And also inside of this fair value gap. I want to see us come down. If we're going to be in this recession bear market for the stock market, I want to see them come down. Now, people are talking about that's crazy and that will be a recession. Well, people like me, we're going to look for opportunities. This is the weekly time frame. Let's go down to the daily time frame. It's clearly and understood that the market is in a sell program. Look what the market did last week. We traded up into this right here. What is this right here? And again, these things repeat in all markets. What is this right here? And I just showed y'all 9 trillion, almost 10 trillion wiped out of the stock market. What is that right there? Is it random that we trade up into that? Trade up into that, we gap lower and then sell off, taking out liquidity below the market. Market price action is seeking sell side liquidity. We're seeking liquidity below the market, which that's where the pending orders are in the market. For people, let's use this as an example. People that been holding 401ks for years and years and decades, and they're allowing their jobs or their companies to allocate their funds to a 401k. Your job is setting you up. Your job is not, or your financial advisor is not doing you any good service, just letting you throw money into your 401ks, into this market. Because now what? All they're going to tell you is, hey, man, this is normal in the market. This always happens. The market is going to correct. But you're sitting there watching your profits erode away from the markets when you could have took some, potentially bought some real estate, potentially bought some gold, potentially bought some type of other assets, crypto, whatever. And you're sitting in there, people right now that are in their 401ks holding on. People are not going to sell out of them. People are not going to get out of them. They're just going to hold the line, and you're going to watch your value and all that wither away. So for the people that been holding, all they're doing is taking them out the market, selling the market off, grabbing that liquidity, scooping up orders. That's exactly what they're doing. John, you say you have a professional managed account with Fidelity and you're just watching. Well, you must be watching your profits and your gains erode away, John. But I understand. I can't tell nobody the traditional way that has always been taught. I can't tell nobody. But guess what? As the profits are going lower, and sometimes you gotta listen. I'm gonna tell y'all this. Once you understand money, once you become competent on how money works, nobody's going to manage your money better than you. Unless you get too much money. Let's say you got $100 million type shit, $30 million. Then that's when you go seek out some help and people to help. But even then, you still should be managing your money. You should still be knowing where everything is going and have the final say so when it comes to your money. But right now, Fidelity is probably taking your money. Check it out. Fidelity is probably taking your money, using your capital, and shorting the market. Did you ever consider that? But yes, what I'm about to say, have y'all ever considered that? Have you considered that the people that are managing your money are not really using it for your best interest? So that's why I say you're the best manager of your own funds. So while people are sitting there like John, you're sitting there holding, let me see, Echelon, I'm still holding my shares. Is it smarter to hold or sell and reposition? I can't tell you what to do, Echelon. All I can tell you is, I can't tell you nothing. I'm not no financial advisor. You're going to do what's best for you. Everybody's situation is different. But I would say, understand the skills that I'm showing you. Go sign up to my Patreon. And if you've been in something for a very long time, for like years and years, these markets aren't going anywhere, but they're going to put pain in the markets. But if you learn a skill set like what I'm showing you, and you learn how to hedge, learn how to trade futures, sign up to my Patreon, then you can find opportunity shorting this market, earning cash. Yesterday alone, I know an individual on this candle right here. You see this candle right here? Yesterday, this was from Friday. I know a individual who shorted the Nasdaq and made $500,000. That might sound crazy to y'all, but I know an individual who shorted the Nasdaq and made $500,000. Not me, but I know an individual who made $500,000 in one day. But if you listen to the news, they're pushing fear. They're telling y'all, hey man, there's fear in the market, Could y'all believe that? Or do y'all think it's cap? Echelon, you say if you have money in the bank account, your own bank uses your money as leverage in the stock market. Yes. You're involved in the market whether you like it or not. Yes. That's why you should have tangible assets, real estate, gold, crypto. You need tangible assets, and you need to learn this skill set to hedge and whatnot. But I know an individual who made $500,000 yesterday shorting the Nasdaq. So let me go down to the 15-minute time frame. If y'all don't believe me, I've been preaching this. This is my go-to market as well. Let me see right quick. Let me throw up my weekly dividers. No, I don't have them thrown up. But let me do this right quick. Matter of fact, let's go do this right quick. I'm going to do this right quick. I'm going to show you what happened yesterday in the NASDAQ in one day. So I'm going to go from Friday, 12 o'clock midnight. That's Friday, 12 o'clock midnight with that vertical trend line. And I'm going to go out to Friday, the end of the day. Right there. So this was yesterday in the Nasdaq. Friday. Trading this market, I know an individual who made $500,000 in one day. And because my community that I come from, I didn't start off in the crypto community. I didn't come to this XRP community. I always known about XRP and the banking system, but I would never be a part of that tribalism that they got going on. I would never be a part of that. I come from a traders community. So our community, we do this every day. So what I'm highlighting right now is, matter of fact, I don't want to use that. Let's use this, get a trend line. Let's look at London. London session starts at 1 a.m. to 5 a.m. And that's London. I'm not going to be too much longer. I'm gonna hurry up and get up out of here. I know y'all want to enjoy y'all day. And tomorrow we'll go live and we'll go more in depth with the markets. So this was London session earlier yesterday, early in the morning, 1 a.m. to 5 a.m. New York Eastern Standard Time. Yes, diversification is a must. So during London session, we cross over at 12 o'clock midnight. We take out the previous day's low, which was Thursday's low. You see this low? That was Thursday's low. We go down, we take out sell side liquidity right there. Take out the sell side liquidity. Below old lows, there are pending orders. So the market makers, they drop down. It's not random that they take out the liquidity and draw the market back up inside of this range. As they draw the market back inside of this range, y'all tell me what this is right here. This formed during the Asia session, Asia session yesterday. What kind of PD array is this? This is this candle right here. What is this right here? Kind of candle is that? Make sure y'all hit that like button. Subscribe to the Patreon. I appreciate it. Anybody knows what kind of candle is that? I'm gonna go ahead and highlight it. It's not a bullish order block. It's not a bullish. What is it? There you go. It's a bearish order block. If y'all want to know more about them, sign up to the Patreon. So you can see after, and I'm back. This is called back testing. This is how we go in the market as a trader, not you long-term investors. And again, I'm trying to show y'all how, as they push fear, mainstream media, the headlines, the news, social media, they're pushing fear on you. But us smart, intelligent traders, we know what's going on in the market. We don't care what way the market is going. There's always opportunity if you learn this skill set. So we drop down 12 o'clock midnight. We cross over to Friday. We drop down. We take out the previous day's low from Thursday. We liquidate that low and the market trades back into the range. It trades back up to this specific institutional level, which is this bearish order block. It's not random that we trade up into this level. We don't go above it. Your stop loss would be above this high right here, stop loss. Price doesn't even come up there. It stops inside of the order block. We trade lower. We tag it 1, 2, 3, 4 more times. And then this all happened during the London session. Check it out. This all happened during London. And then guess what? We displace lower. We trade lower. Boom. Sell off. It's tank. You're all the way in profit. Let's cross over to New York. Well, I'm not even going to do that right now. I'm going to say that for another time. But if you was up early in the morning, you got in during London session, the market sells off. It provides you another opportunity during the New York hours right here, SIBI. So if you didn't catch London, you could have waited for the New York hours, but it would have been best to catch London because that was a great opportunity in the market. You see, during New York, market trade, we create a fair value gap in the form of a SIBI. What does the market do? It trades back up into it. Offers you one opportunity. It doesn't offer you no more opportunities, but one shot. This market was in a hurry yesterday to get to where it needed to go, which was sell off. So it offers you another opportunity triggers your limit order at the bottom. If you ever want a guaranteed order and you're trying to short the market, place your limit order at the bottom of the gap. It goes up there, triggers it, sells off. It takes out this low right here, this low, sell side liquidity. You could have shorted that, scalped it, whatever. But we know that the market is reaching for liquidity below the market. It retrades back into the range. It trades up into this order block right here. See how it takes out liquidity, just like we did earlier here. We took out liquidity, trade up into that order block. We trade down, take out sell side liquidity, trade back into this order block, and then the market just sells off cleanly. And that was Friday. Many opportunities on Friday, but it was in a hurry. So all that is intraday price action. If you want to learn how to trade intraday, subscribe to the Patreon. But there's opportunities as the stock market, crypto market, as all these markets sell off and trade lower, there is opportunity for you to hedge against the panic and all the fear. There's nothing to be panicking about. There's nothing to be in fear about. Take advantage of opportunities by learning how to trade and learning this skill set that I'm showing y'all. Learning these skill sets. So that's the Nasdaq. And again, S&P doing the same thing. This is a higher time frame, monthly chart, selling off, and it's early in the retracement, or it's early in the market reversal. So it's not a reversal yet. What would make this become a reversal? If the market trades down and breaks this low right here, that will be considered a reversal for me. If we trade down rapidly, and there's so much opportunity right now to be shorting the stock market, it's damn near like cutting a knife through butter. That's how easy the market is right now, because it's about to start loosening up. So if we start selling off, coming down lower, sell side liquidity below the market right there. That right there, if we break that, I would consider that a reversal in the market. And if we break that, this candle right here will become a breaker. But we're not there yet. For now, I want to see it trade down, take out these liquidity pools, and then we got some fair value gaps in the market. And this is the S&P. Right there. There's a fair value gap right there. And then we got another gap in the market right here. So we got a lot of PD arrays that we can be utilizing for the Nasdaq. I might need to drop out to a 6 month. Let's see what the 6 months look like. So on the 6 month time frame, which is a more higher time, it takes 2 candles to complete 1 year. So if you're ever on the 6 month candle or time frame, it takes 2 of these candles. That's 1 year cycle. So that's how long and drawn out these candles are. This candle right here has 2 months to complete. And I need to start analyzing from this perspective, because right now we traded down into this 6 month BISI, 6 month BISI in the market. Right there. So you can see us trade down into this gap, drop down into it, and that's where we currently. Do you think it's random? Again, it's not random, it's algorithmic. But do you think it's random that the stock market trades down directly into this gap right here? Now that makes me want to say, hey, let me go back over to the Nasdaq, and let me go on to the Nasdaq out to the 6 month time frame. Let's come to the Nasdaq on the 6 month time frame, and I want to see where we just traded to. Okay, we're not there yet, but on the 6 month time frame for the Nasdaq, there is a small little fair value gap right here. I'm gonna highlight it. Small little gap. We could potentially trade through that and then come down, trade into this 6 month gap right here. Remember, the higher time frame has more influence over price. Higher time frame has more influence over price. So I'm gonna be looking for these levels to be targeted. And also, we got a large order block right here. This candle right here is an order block on a 6 month time frame. Now we got 2 months to complete this candle. Once that completes, we'll go into the second half of the year. So we got pretty much two quarters or two halves of the year, pretty much two halves. Two of these candles complete 1 year. So I'm going to go ahead and forecast that. These next two candles will be bearish candles. So we might close this year in the stock market in a bearish market, unless we come down to one of these key levels and use it as support and start going back higher. We will see. You gotta include the there's other dynamics that are included, like tariffs and the economic, whatever's going on in the economy, or is there war going on? So we'll see. I'm gonna be watching it though. But that's the Nasdaq, and then of course the Dow Jones doing the same exact thing. Let's go out to a 3 month. Let's go out to the 6 month. So on the 6 month time frame, we just traded through this BISI right here, and then we got this order block right here, this down close candle. Everything could get switched in a minute. Like, what is the narrative? I'm to the point now in all these markets that I feel like there will be some type of black swan event. Some people might think we're in one right now. We don't know what's already coming. So there is going to be some type of event or events that are major, that are already priced into these markets, that are already predetermined. That's my macro perspective. I think there's something that's coming, because these markets are very volatile, and there's a larger narrative that is built into these markets. Y'all can let me know in the comments what y'all think. Y'all let me know what y'all think is coming, as far as some type of driver, some type of economic sentiment. What do y'all see? Because let me tell y'all right quick. I might be good and I might specialize in analyzing these markets and trading these markets. But again, I don't know everything. So I'm human, and I'm honest to tell y'all. Some of y'all might have some insights that I don't have. And I'm open to hear everybody's perspective, because I don't know everything. And that's just me being transparent. Reverse carry trades. Okay, Malcolm. Shout out to you, Malcolm. I ain't seen you in a while. Shout out to you. So there's a lot of things that can happen, man. Like, again, I don't have a crystal ball, but I can get in these markets and find opportunity right now. That's what I specialize in. I can get in here, go find opportunity right now, and cash flow. But far as big picture, macro perspective, meaning like in the next 10 years, the next, is BRICS gonna, take over the Western world? Are they gonna take over I can't tell y'all that. We can speculate on that all day, and we can go off the narratives that are out there in the universe. But I can't tell y'all, oh, the dollar's gonna crash, because I don't see the dollar crashing. Or is there going to be one global system? Is everything? I can't tell y'all all that. I just specialize in trading. And when y'all follow me and y'all want to learn this skill set, just know that I'm not a know-it-all, but I have to have a speculation perspective as well. I got to be able to say like, okay, something is coming. So what are the narratives on the table? And we go from there. You know what I'm saying? What are the narratives? What are they putting out there in the universe? Some things you can't see. Like, nobody's seen the pandemic unless you was really watching the World Economic Forum and Klaus Schwab and what he was saying. Nobody's seen that coming. A pandemic. But I'm telling y'all right now, based on market structure and price action, something is already predetermined, something is coming to these markets. And it could be the tariffs that are bringing pain. Okay, what's after the tariffs? Remember, Agenda 2030, or they're trying to get us to a certain point by the year 2030. And that's what we've been seeing. We're in 2025. Now things with digital assets are escalating. They're ramping up. Everything is moving fast. I just sat here and showed y'all regulated futures trading for crypto products are coming. They're here pretty much. They're already here. We can start trading futures right now in crypto. But XRP futures coming this month on Coinbase. And I'm going to be paying attention to that. And We got regulations. We got the regulations front, and we got things coming. Things are moving fast. But there has to be pain. There has to be pain. Okay, I feel like y'all can let me know in the comments. What's something that, for us to switch over to this new financial system, are they going to do it quietly? Or are they going to just roll it out like normally? Like, hey, this is what we're doing now. Or is there an event that must happen to get us to that? What do y'all think? Is there a event that must happen to get us to that point where we're utilizing blockchain technology and we're utilizing these technologies for utility? We're utilizing them. What do y'all think? Do we just go over there all normal, like, hey, this is what we're using now, or are we going to be pretty much pulled into a crisis, some type of event, which I'm always going to say they're going to pull us into an event type situation. That's just me personally. But make sure y'all hit that like button, man. That's the Dow Jones. And then like I said, not much going on. There's opportunity. Tomorrow when I go live, we'll dive a little bit deeper into these assets, cryptocurrency, whatever. But I definitely appreciate y'all time today. I'm not going to hold y'all all Saturday. I haven't been live in a few days. But if you're interested in learning technical analysis, come over here, sign up to the Patreon. And y'all be looking out for me tomorrow. I go live. We're going to go more in depth with the market and what I see for the upcoming week and forecasting. Malcolm, you say, I think they're going to destroy the old system and roll out the new system as the savior. But Malcolm, how do they, like, what does that look like? What does that look like? Is it starting right now? Is the system being destroyed right now with the tariffs and the recession talks? Is it starting? We know it been started. It started during the pandemic. But what's the next phase? How can we be visionaries? That's why we're Boss Vision Network. How can we vision, or how can we forecast and project what the next chess move on the board is? Because it can come from any direction. How do we see it? What's the next chess move after tariffs? Yeah, Claude, I'm going to be on tomorrow, so definitely be looking out for that. I'm going to look up the reverse. I'm not familiar. I heard about it, but I'm not so familiar with the reverse carry trade. I'm going to be looking into it. Jude, you said we need a good old fashioned hack or a DDoS attack to implement the new system. That's a possibility. They've been warning us about that as well. So after tariffs, after all these countries are like battling it out with tariffs, does one country send a cyber attack? That's good speculation, like, because all this stuff is built in. I'm telling y'all, I'm sitting here telling y'all it's built in. Malcolm, you watching that bond market? I think the tariff thing is just for the mainstream. Yeah, I've been watching the bond market. Let's go ahead and look at the bond market right quick. Let me come over here. The bonds are rallying right now. The dollar, matter of fact, let's look at the dollar first. The dollar has been selling off for the past few weeks. Been selling off, so that's weakness in the dollar. So that means the bonds have been they've been buying bonds. Somebody's been buying U.S. Treasuries. And as we look at the Treasuries, let's go down to a weekly. On the left side of my screen, this is the 30-year Treasury. The Treasuries have been going higher. So as the Treasuries go higher, the currencies go lower. As the Treasuries go lower, the currencies go higher. So somebody's been buying up those treasuries, but we're still overall just consolidating. Malcolm, other countries borrow at 0% interest rate, then exchange for the USD dollar. If they tank, then it does the value. There goes the value. They get left holding the bag for sure. For sure. That's definitely a scenario. That's definitely a scenario, man. That's definitely a scenario. Again, stock market in the red. Stock market in the red. I showed y'all that when you see red, there's still opportunity. To start dropping all that on the market crash possible. Malcolm, I appreciate your perspective, Malcolm. I definitely do. But I think that's gonna be it for this today. Hopefully, I covered some things that were relevant. And I appreciate y'all joining. Definitely be looking out for me tomorrow. Hopefully y'all have a good day, and we're gonna have an exciting April. Again, I'm gonna be talking about those futures contracts for crypto that are becoming regulated. I'm gonna definitely be looking for that XRP futures on Coinbase. So if y'all want to go ahead and start signing up for Coinbase, sign up for Coinbase. What is it called? I think it's called Coinbase Advance. Yeah, right here. Coinbase Advance is integrated with TradingView. So if you come over and sign up for Coinbase Advance and start getting yourself ready to start trading in a regulated environment, you will be able to integrate with TradingView and trade directly on TradingView. So y'all go sign up for Coinbase Advance. I'm going to be getting into that crypto trading. I've been anticipating this. But let's see right quick. But a shout out to y'all, man. Make sure y'all hit that like button. I'm about to get out of here. Subscribe and sign up to the Patreon. I'll catch y'all tomorrow. Peace out.